We all need financial freedom, that's a given. But say out of every 100 people, only 30 of them are high earners with guaranteed financial freedom, like celebrities, engineers, doctors, or just individuals lucky enough to be born wealthy. As for the rest, they likely have a smaller income and aren't struggling by any means, but they also don't know how to grow their money. But there's hope still, because as we know, money earned from a living is called an active income. And an active income, while for many is the primary source of income, it's not the only way to earn money. Most people who want to make the most out of their money make use of several avenues known to them in the form of generating passive income. One of the main types of passive income is investing through the stock market. One of the best parts of it is that you can start with as little as $10 or as much as $10,000. And back then, you had to go all the way to the bank to buy some stock. But nowadays, you can buy stocks in global companies with just a few clicks on your phone. But some of my friends who know about my videos brought up some apprehensions that they had. They know how important and lucrative the stock market can be, especially with the rising level of difficulty it is for the newer generations to be financially independent in this economy. And the number one concern that all my friends brought up was that they didn't know anything about the stock market, and that lack of knowledge makes the idea of investing so overwhelming. Along with that is a lack of time, lack of money, and the fear of losing your money. So that's why I wanted to make this video, to address a lot of the concerns and the fear surrounding the stock market. Hey guys, this is newFire, and let's get right into it. So like I mentioned, the number one concern is a lack of knowledge about the stock market. It boils down to research. It can be hard knowing where to start, so here's a couple things you can do. Before this video, I just finished a series about investing in the stock market for beginners. Invest in companies that you know, heard of, or even consume from on a daily basis. These would be companies like Amazon, Microsoft, Costco, and some others I talk about in that series. Another thing you can do if you're overwhelmed by lack of knowledge is start by opening a brokerage or an IRA account. You'll only be able to use money in your IRA account after you retire, so if you're planning on using the money you earn from the stock market, go for a brokerage account. Making an account and transferring the money you want to invest to that account can all be done in 10 minutes, and you can start investing, easy as that. And a famous investor, Warren Buffett, said many times to just invest with index funds. They're super easy and low effort. An index fund is a portfolio of stocks and can include bonds and other investments as well. Index funds are a form of long-term investing, so you invest your money and wait for the next 10, 20, or 30 years. If you have an employer that supports a 401k plan, then open an account and contribute to it directly from your paycheck. You don't want to put all your eggs in one basket though, so select a few mutual funds to spread your investment across. 401k plans do come with some fees because they're managed by someone else, but it's a small cost for something that will be beneficial for your future. And automation is key. If you can, set up a monthly transfer of some amount of money from your paycheck and keep investing. And the next concern I hear is a lack of time, either because of a full-time job or just the many other things in life that you have to deal with first. And yes, there are many forms of investing that take up a lot of your time, like trading, also known as short-term investing, which is almost akin to a full-time job. But long-term investing takes very little time and thought. Passive income is named that way for a reason. You invest and leave it alone. When wealthy people invest, oftentimes they keep their money in a few household names they believe in and don't do anything after. They don't take their time to bother about the daily ups and downs of the market and just focus on their active income instead. That's because for them, the stock market isn't their bread and butter. It's more for building long-term and generational wealth. If you don't have time, that's completely fine. You can still benefit as much from the stock market as someone who puts in more time. All you have to do is invest in a few companies and hold these investments for years, decades even. And if you have the ability to, set up a system where part of your active income consistently gets invested into the stock market. You don't need any time for this form of investing, just some patience and consistency. And the third concern I hear is a lack of money. Like I said, you don't need to be a millionaire to start. Don't believe me yet? Here's a couple examples. So Ronald Read was a janitor at JCPenney and amassed an $8 million fortune by the time of his passing, just by investing. He didn't have an MBA or a huge salary. He just saved and invested the money from a small paycheck into big household names like JP Morgan, CVS, and Johnson & Johnson. What's even more inspiring is that the library he donated his money to also invested that money to receive dividends and benefit from them in the long run. Not everyone's going to be that success story, but if you can grow your money even a little by not doing anything, that's a win. And if that didn't convince you, I read a story about someone's grandparents who opened a brokerage account for their grandson when he graduated high school and started with an investment of just $2,000. Can you guess how much that became over 40 years? $900,000. Almost $1 million. So, money grows money, and it's a small but consistent amounts that will make a huge difference years down the line. And last but not least is the fear of losing. falling prey to some scheme or fraud, bankruptcy, and market volatility. All that can happen, and it's important to know that there is some risk involved with dealing with the stock market. If something sounds too good to be true, it probably is. Avoid schemes and pumps and dumps, and just stick to what you know works best. That starts and ends with investing your money in what you know and can trust. To minimize the risk of losing your money, you can invest in index funds. Like I said earlier, they're low effort and super easy. All you have to do is consistently invest over the next few years. You can also invest in 401k plans. Also easy to maintain, and all it requires is consistency and patience. The reason index funds and 401k plans are recommended is because while they're slow in growth, they also have much less risk associated with them. Index and 401ks are reliable, which makes them the best for an investor who doesn't have much time and just wants to invest and forget. You can also invest in household names. You can try spreading your money across 25 stocks. You can check out my series for this. And if you lose money on, say, 4 or 5 stocks, another 4 or 5 could get you 10 times the original investment in a couple decades. So hopefully after watching this, the idea of investing in the stock market is a lot less overwhelming. The beauty about the market is that you don't have to jump in with 2 feet. A foot, even just your toes, are fine to start with. Investing starts and ends on your terms. If you want to ensure that you're doing all you can to grow your money, follow some of these tips. Start early. Earlier you start, the better, and if you have kids, set up an investment account for them as soon as possible. 50-30-20 rule. Save and invest 20% of your paycheck, put 50 towards paying your expenses, and the remaining 30% for other wants. And invest that 20% or whatever amount you can consistently. It really does make a difference. And last but not least, be patient. The key to long-term investing is waiting a few decades to see some big returns. Don't stress too much about the money you invested and focus on making more through your active income. You'll be able to reap the rewards of your hard work and patience that way in a few years. And that's it. We've reached the end of this video. I know it's been a long one, but concerns about knowledge and fear is the thing stopping a lot of people from making that step to invest. If you can get over these uncertainties, you can make the first step towards the path to becoming financially independent. Alright, we've reached the end of this video. Thanks for watching and stay tuned for more. This is newFire, signing out.